Hi everyone, welcome. This is Eric Gros-DuBois. It is the day after tax day, EPGD Attorneys at Law PA, and unfortunately this is not going to be a good message for all you accountants out there, but I'm talking to all the business owners. So here you go. If your accountant screws up, your bookkeeper, your accountant, your payroll company, any of these professionals that you've hired to help you run your business, because guess what? I've never cut a check, not once, for payroll, never once. In August 2013, I put myself on payroll because I knew that I was an S-Corp. My company is a Florida corporation being taxed as an S-Corp. It's filed as an 1120S. When you hear the accountants chit-chat with each other, you hear them say things like, oh, it's an 1120, is it a 1065, is it an 1120S? Those are the forms for the three types of ways that a businesses are generally taxed. 1120 for a C corporation, 1120S for an S corporation, 1065 for a partnership or an LLC being taxed as a disregarded entity. The default LLC, if there's more than one owner, is taxed as a partnership. Okay, and so I'll actually tell a story. This is a true story. One of my clients gets a letter from the IRS. And you always know, and by the way, for all of you out there who've ever received one of these letters, the worst thing you can do is put your head in the sand. I've had clients come to me and I said, oh, have you got any letters from the IRS? They say yes, and they put a stack of unopened letters on my table. And you know they're from the IRS and they're important when they have that little green certified mail, like you can see that somebody put the certified mail sticker on the letter and they're unopened. I'm like, come on. Because guess what? The IRS has all these deadlines where they give you 30 days, 60 days, 90 days, whatever. And these deadlines are statutory, means they're written into the law, where the Internal Revenue Code, IRC, which is 26 USC, whatever, that law will say, after sending this letter, you have a certain number of days, and then the next thing will happen. And so if you don't open those letters and you don't take your head out of the sand, then you might miss important deadlines where I can actually help you. If you come and you've missed all the deadlines for the examination, and you missed the deadlines for appeals, and then you missed this, and then now you're just in collections, I can try. And I'm not going to say I won't be successful, but it's going to be a lot more expensive because guess what? I'm going to bill you hourly. Okay, so here's the deal. One of my clients gets this letter in the mail. It's from the IRS. And the letter says, hey, you didn't pay your payroll taxes. So if you have a company and you have employees, every quarter you have to file what's called a 941. That's a form, another form. Then you have to file Form 940 at the end of the year. And basically, with these forms, you say, hey, IRS, in the last quarter, right? So the third quarter 941 will be due in the first month of the fourth quarter. And you will say, I paid this much payroll to these people. I withheld this much in their taxes. Here's the employment taxes, which is Social Security, Medicare, and federal unemployment. And here you go, IRS. I'm paying the employment taxes and I'm going to give you that portion, the withholding, right? Because it's my job to withhold the money from my employees' paychecks because the IRS doesn't trust them to pay their own taxes next April. So I withhold from their paycheck, me, the employer, and now what they've done is they've made it my problem. So here's what happened. My client said, well, wait a minute. I totally paid the taxes. My payroll company handles that. My bookkeeper handles that. My accountant handles that. And by the way, they were all together. The bookkeeper referred the accountant who referred the payroll company. They were all buddies. And so, sure enough, the payroll company says, oh yeah, we sent you an email, but we never heard from you that there was something wrong with the link to your bank account. So yeah, we didn't take that money out of your account. So in point of fact, that money was never taken out of my client's bank account. So my client had the benefit of that money. But as a regular business owner, I'm not sitting there looking at my bank statement. I'm not sitting there thinking to myself, oh my goodness, did I pay my taxes? I hired professionals. And the professional's job is to withhold the taxes, prepare the tax forms, the 940, the 941 at the end of the year, the 1120S and the 1040. I pay these professionals. And by the way, they're sending me a bill and I'm paying it. And guess what? When I don't pay their bill, they're quick to remind me, right? They're quick to let me know that my credit card was declined. And here's the problem. Ready for this? We filed a reasonable cause abatement with the IRS saying, dear IRS, please don't penalize my client. We understand that they forgot to pay the taxes. It wasn't their fault. It was the accountant's fault, the bookkeeper's, it was their fault. I promise you it was their fault. Here's the emails even where they acknowledge, oh, whoops, we forgot. IRS says, we don't care. You're still penalized because the reason for penalties is to teach you a lesson, and it's your fault for hiring a bad accountant. It's your fault for hiring a bad bookkeeper, and it's your fault for hiring a bad payroll company. So here's what you can do. Now, they don't say this. I'm going to tell you this. You pay the taxes, you pay the penalty. You fire all those people, hire new people, and then you sue the old people for malpractice and make them make a claim on their malpractice insurance. So there you are, Eric Gros-DuBois coming at you the day after tax day. Sue the bad guys.